Hey my people, how you doing? It's me again and welcome to the journey to being funded, and we'll go through the Thursdays market review and how I viewed the market and how I came to the conclusion of taking that trade. Okay, so on Thursday is the last day that I take a trade, because Friday is NFP and I don't want to take trades during NFP days. Okay, because during NFP days sometimes it can be a gamble. Okay, so I'm just following the rules and playing by the rules. Okay, because once we've agreed that if you want to be successful in this game, you must follow the rules and be disciplined. Okay, so without wasting any time, we'll just dip to the market and see why I took the sell trade that I took, of which the buy could have been a better decision, but I thought a sell would be good in that place. Although I followed the rules and I risked 0.5%. Okay, we agreed that this journey to being funded is not about profits or losses. It's all about following the rules and being disciplined and executing in accordance to the plan. Okay, in accordance to the trading plan. So let's get to it and see what I saw and why I took the decision that I took. The pair that I was trading, it was GBPUSD. So let's get to it. So as you can see, this is the GBPUSD chart here, and this is the execution that I made right here. Okay, so the main reason that I took this sell here is because I was anticipating for this you can see, let's change the color. Let's put it on a black. Yeah, you can see this the shaded area here. This is it's actually a daily fair value gap. Okay, so I was anticipating for this daily fair value gap to hold price. You can see this middle line here, this dotted middle line here, that's a consequent encroachment. Okay, and the consequent encroachment, I was anticipating for it to have a reaction around this level. Okay, so once I saw you can see the reaction here, this black candle here, this is a sell-off, and I thought to myself, it's during London session, and I'm looking for the high of the day to be created during this reactional level. Okay, so what I did here, I pull out the trigger and I pushed it here. Okay, and once I pushed, my target was into this intraday low. This low was created just after Asian session. Yeah, and I was also targeting this Asian session low. Okay, so my risk to reward was 1:2, putting my stop loss above this down close candle. Okay, I mean this up close and down close candle. Okay, so I was targeting this low, and I used a Fibonacci from this range. Let me show you, from this range to this range, and it was above 50% reactionary level. I mean 50% into this range. Okay, so what I did is that once I saw that entry level there, I executed immediately. Okay, although later on I was stopped out by a wick. Then the price continued going upwards. You can see it went upwards and up to this fair value gap here on the 30 minutes time frame here. You can see this is where I got beaten, and once I was stopped out, my setup occurred once again. You can see once I was stopped out on the 30 minutes, it formed my entry. You can see here, this was another entry on a long, but it wasn't in accordance to my plan, so I didn't take it. You can see it went straight to 1:2. It went straight to 1:2, but it was after I was stopped out. So yesterday's London session was a continuation upwards, and that's how I could have executed to benefit into this trade, into this Thursday's London session trade. So you can see how we took that loss. It was a 0.5% loss, and it's a good thing that we are risking and percentages are not going all gun blazing. Okay, and you can see this gray area here. It's an OTE. From this range, this down range here, from this high to this low here. Once you put your Fibonacci from here to here, this area, let's paint it red. This is an OTE level. This is an OTE level. Once you highlight this high to this low, this is an OTE level. This actually price came to 0.79%, and then we started to see this sell-off. Although I didn't anticipate for it to have this type of deep retracement up to this level, but this blue line here is a 4-hour PDRA, and you can see how the 4-hour PDRA reacts price. Okay, once it hit the 4-hour PDRA, it decided to short again, you can see. And although this daily PDRA didn't work, I really believed it will work and create the London high and distribution downwards. Okay, so I anticipated this as a Judas swing, although I don't know why these people decided to push this algo so deep. They should have just dropped it from here, because I can see I see very many times they get to the middle of a fair value gap, then they drop down. Okay, so let's go to my dashboard and see where we at with our challenge, the journey to being funded. Okay, so my people, this is the dashboard, and this is how our numbers are performing. Just don't forget, we're supposed to hit the 8% target, and we have a 8% drawdown. We're still at phase 1, and you can see we are down, let's say 1.7% down, and this is our max drawdown for this whole account. Our daily loss is $250. Actually, I don't want to use the whole of $250 in a day. My plan is to execute with just 1%, let's say $50. That's 1% for this account, and when I'm in loss, I just drop to 0.5% per trade. Okay, so how are we gonna approach this? One of the ways that we're gonna approach this is that I'll make sure I risk 0.5% until I'm out of this drawdown. That's the correct risk management. You see, what I understand is that you can be good at technicals, fundamentals, but risk management is another important aspect that one should understand. You should know how to come out of the drawdowns, because it's not once I can speculate price and it goes exactly to the levels that I call, but because of risk management, I blew the accounts. Okay, and price goes to the places that I call. Okay, so this series here is to help me execute in a good, disciplined and focused manner, and make sure that I follow proper risk management in every trade, and also trade less. If you've noticed that I'm trading like 3 days a week. Okay, I saw a good setup in gold, but I didn't enter again. The trade could have paid all of these losses that I have, the 83.77 or 1.7% loss. Okay, but I didn't, because of what? I want to develop my risk management skills to be top notch, because once you master risk management, you'll be reaping this market part every now and then. So let's go to the curve. You can see my curve. We started with a sharp nini down, then we tried to come out of the drawdown. You can see here we started climbing, but bang, we went down again. So we are closing the week on a loss, and our win rate is 33%. Win rate plus loss rate, it's 33%. And if you look well, these are the trades that we already took. The first day I took like 3 trades, and I told myself, oh Kev, that's not the way. You should follow the risk management protocol. Okay, because that's the purpose of all this. You can see these are the trades that I took, and these are the profits. Yesterday I took a $23 loss. the other day I won a $15, and this is the biggest loss that I took. It was a $49 loss. You can see an $18 loss here, and I guess that's it. There's no other trade that I've took. I've took just like 6 trades, and the first 3 trades, this first 4 trades here, 18, 3, 1 and $49, it was on a single day, because once I saw I've lost this, I decided to go in, and maybe I said that this is another trade that it says sell, but I start buying, and I bought. Actually, you can see I bought and I went to a loss, and I had previously sold and I went to a loss. So that's why I decided I won't be going to the markets again until once I execute my one shot for the day. That's it. I'm not going back to the markets again. So make sure you trade with this. By the way, if you are willing to start your prop farm journey, make sure you trade with the skill funded traders, because these people, Kina Paladin, these are they are, let's say they are legit. We know they've made good money trading. And if you want to trade with this account, just on the coupon code, just put Kev the analyst there, and we should be better together. Okay, so this is my daily losses here. You can see $250. I shouldn't lose past that, and I'm at 49.16. that's my equity, and I'll be risking 0.5% of this, not of the 5,000. No, I'll be risking 0.5 of this equity. That's how I will approach this until I get back this 1.25%. okay. Actually, this is just, let's say, like 2 to 3 trades. Once I execute 2 to 3 trades, we're done and we're out of the losses. Okay, but the trades should be right. Okay, so over the weekend, what we will be doing, we'll be still managing the risks, okay, and back testing. So my people, that's the progress that we've made, and the main progress that we've made is following the plan, and I'm grateful for that. And this week have been great. Okay, I've managed to follow the plan. I've managed to execute in accordance to the plan, taking 1 trade a day. Once I get that loss, I'm out of the market. Okay, and the goal is to get 1:2. okay, 1:2 is the goal. Okay, if I risk 15 pips, I get 30. If I risk 50 pips, I get 100 pips. Okay, that's the goal, but it all depends on the setup that presents itself. Once I have a good setups that I have to risk 20 pips, I'm just reducing the lot size and going all in. Okay, but I've noted that if you work in percentage, the whole game changes for you. Okay, that's the main thing that I've learned. Okay, I've learned, if you risk in percentages and you take care of your losses, the win will take care of themselves. Okay, so let's close it at that point, and we hope next week will be a good week. And obviously today I'm not trading, is on a Friday. Right now it's during 9:16 a.m. Kenyan time, and I won't be trading today because we know it's NFP and people gonna be wrecked. Most people will be wrecked today. We know that for a fact. Most people will go in guns blazing and they will blow their accounts. It's not once I've blown accounts on NFP days, CPI days, and let's say days like FOMC days, so, and monetary policy report days. Those are the 4 days that I will never be touching the charts again. Okay, because I don't have to trade every day to make good money. That's what I've understood. Watching some few tutorials from the funded traders, the likes of Paladin and Omar, these people don't trade every day. They don't trade every day. I saw a video actually from Paladin. He took 5 trades in a certain month. I can't recall the months, but it's actually like 2 months ago. He took like 5 trades and he made $20,000. You can imagine 5 trades and $20,000. So you don't have to trade every day. Just have good trading days. Just have high probability trading days and have A setups. Okay. So I'm on the verge of creating a system that provides A setups only. I've been writing, man. I've been writing. I won't lie. I've been researching and writing and trying to get a clear understanding of how I can get a setups. Okay, so I'll leave it at that for today, and I'll see you on the man on a mission. Man on a mission continues. Okay, so until next week, have a good trading day for those who will be trading NFP. For me, I'm out. Until next time.